Markets are bleeding red this week. Their fear and greed just plunged to 11, still extreme fear. And when sentiment collapses like this, something big is usually happening around the corner. But here's the twist. Even in the middle of this chaos, I want to assure you that there's light at the end of the tunnel because the Federal Reserve just dropped two massive signals that could flip this entire market going into December. Hey YouTube, Julian here, and let me break this down for you fast, simple, and straight to the point. Let's get right into it.
Now, if you like videos like this, I'm going to give you 5 seconds. Help me out by clicking subscribe and also commenting more so that I can produce more videos like this for you guys. 5, 4, 3, 2, 1. Without further ado, let's get back into the video.
Boy, oh boy, what a turbulent week it was. The S&P ended the week with a 2.5% loss, the Dow Jones not too far behind with a 2% loss, and the overall market looking pretty red with NVIDIA ending the week with almost 6% down. And this was despite the chipmaker posting better than expected Q3 earnings and providing a strong outlook for the current quarter. So why does this matter? Because when good news, excellent earnings, strong guidance, and record margins cannot pull the market up, this means that the macro is in control. Not earnings, not tech, not momentum. It is fear that is driving this market. And this is evident from the fear and greed index, which is now at 11, up from 6 the day before, but still in the extreme fear range. Not only that, we finally have the unemployment report out after a delay of 48 days due to the US government shutdown. And as expected, the unemployment rate in September came in soft at 4.4%, up from 4.3%. Now, keep this in mind that this is for September. So who knows what the unemployment rates will be for October and November. But what we can clearly see is this: the trend is going up. And the unemployment rate is one of the important numbers that the Fed watches, and now it's moving in the wrong direction. Now, the big one, the FOMC minutes show that the Federal Reserve is considering a December rate cut, but the committee is deeply divided. Some members want a bigger cut, like the New York Federal Reserve President John Williams, who signaled that he could support a cut when the central bank meets in December. Some members, like the federal governor Stephen Miran, said that he would vote for a 25 basis point rate cut instead of a 50 basis point cut. While Boston Federal Reserve President Susan Collins specifically mentions that she's more inclined to hold the line, meaning that she wants no cut at all, and many wants no cut for the rest of the year. This kind of disagreement is extremely rare. Usually, the Federal Reserve presents a unified front. Not this time. So the market has no clue where the actual decision makers stand. That's why the odds flipped so aggressively. A month ago, there was a 95% chance of a December cut. Then 1 week ago, Powell cooled expectations and the odds collapsed to the 40% range. Right now, the odds are at a 71% chance that they're going to be cutting the interest rates in December meeting. This isn't conviction. This is confusion because the Fed itself is confused. Now, this is the wild part. Despite all the disagreements about rates, the Federal Reserve was unanimous on one thing: ending quantitative tightening. All the 12 members agreed to end the balance sheet runoff in December. This means liquidity stops shrinking, reserve pressure eases, repo stress cools, market volatility usually decreases. So ending quantitative tightening is usually a form of monetary easing. And this is happening whether they cut rates in December or not. This is the first real liquidity turning point that we have had in a long time. So here's the thing, we are entering one of the most important macro windows of the entire year. Market may be fearful right now, but these are the exact conditions where major reversals typically form. Just remember that. Warren Buffett always says, be fearful when others are greedy and be greedy when others are fearful. And when the market is at extreme fear right now, hey, this might be the market giving you a sale right now. So let's take a look at what's happening in the charts for this week. Right here, you see that I'm on SPY, and as we actually had a look and explained earlier, SPY did have a large dip, about 2% throughout the week. But what's going to happen right now is that SPY is at the support level. So if SPY wants to go up, this support has to be respected for it can actually go up. And if it does go up, it will go up to this level of resistance. And as we can see right here, this was the same level that SPY was at just last month in October, whereby when it came to this level, prices started pushing up and continued its way higher, right, before taking a dip down again. So if this level is going to be respected, this is what I hope for SPY to continue pushing up from this area. And eventually, if it does have enough pushing power, it will actually continue its way up. Next, let's look at some of the Mac 7 companies. This is NVIDIA right here. And yes, even though NVIDIA had some stellar earnings, you can actually see that price actually pushed up, but eventually the markets got fearful, pushing NVIDIA back down, closing below this level of support, and therefore price actually broke through and reached this level of support last Friday. So what's going to happen is that I foresee that NVIDIA will be playing within this level, right? If it does want to go up, it has to break through this level of resistance before it can continue back up to this. But if it doesn't, and if it breaks through this support, I can foresee that NVIDIA will go down to this next level right here. This is from the technical perspective. Next, let's look at Meta. We can actually see that Meta is right now finally at the support at this area right here. So this is another area that has to be a strong area for Meta to hold. As you can see, Meta has tested this area for the past 4 days, still looking that it's holding. And this is one area that when Meta does have a push up, it will actually likely go back up to this area of resistance. But if it breaks this level of support, then I would say that Meta will go down even lower to this next level of support right here. Next, we want to look at Tesla. We can actually see that Tesla has indeed broken through this level of support. This was actually last week. And as I mentioned in my previous video, right, since it actually broke through, it's going to likely play sideways within this range until something happens. It looks like it may be a chance of it going down to this level of support since it did not manage to break, right, this level of resistance. Next, let's look at Microsoft. Microsoft wasn't able to hold this level of support, and what happened was that it broke through, eventually coming back down to this level of support right here. So what this is going to happen is that if Microsoft is able to hold this level of support, likelihood of it coming back up to this resistance would be there. But if it breaks through, you can foresee that the next level of support that Microsoft will be headed to would be right down here. If it continues breaking down, these are the next level of key areas that we can actually look towards. Hopefully, this is a turnaround for Microsoft, and Microsoft is able to bounce back, go back up to this level of resistance. But we'll just have to see. Next, let's look at Apple. Apple has been playing sideways. If you watch my video, you can see right here that they have been doing pretty much going up and down this level of support and resistance. It wasn't able to break through this all-time high, therefore it just went back down. But we need to see what's happening. Again, if this level of support holds, it's going to come back up here. If it doesn't hold, it's likely going to come down to this level of support. Last but not least, let's have a look at Google. And if you have been following me for some time, right, based on my previous videos, you would have heard me talk a lot about this level right here, which is my target area for Google to head towards. It actually missed slightly in October, started going down, but right here, look at what happened on Wednesday. It actually spiked up and it actually hit this area of 294, and right now you can see that it is likely to go up even higher, right? So these are some of the predictions that I've done, and you can see that almost all my predictions that I've actually given has actually hit the target. So if you want to see how I actually predict these areas, guys, I just would like for you to comment down below in the chat, teach me. And if I get 250 comments, I would be doing a video showing you how I managed to predict this kind of targets, especially when it's at all-time high. So just comment down below, teach me, and I would be looking forward to do a video for you guys. So let's see if you can get that. Next, let's look at gold and see what's happening to this precious metal. So right here, we can actually see that last week was pretty much sideways, literally going back and forth for the past 5 days. Still not very clear sign of what's happening. However, if you ask me, gold is still likely looking bullish as long as this area of support does not get broken, because this is what I call as the last level of defense for gold. As long as this area gets respected, gold can still continue its way higher. But if it breaks through this level, I would say that gold would be turning bearish. But for now, since this is being respected, I still foresee that gold has a chance of going up higher, right? But one of the areas that it needs to break through before it can go up higher would be this area right here. So this is what you want to actually look towards happening for gold. Next, let's look at Bitcoin, and Bitcoin has been taking a thrashing recently as well. You can see from this area, Bitcoin just smashed all the way, breaking through this level of support down to this area right here. And if you actually look at it from the weekly perspective, this is going to be an area that Bitcoin must hold in order to continue its way up, because this right here is a SRR on the weekly new R. So this area would be a good area for Bitcoin to bounce up higher. However, if this area does break, which means the sellers are stronger, I can foresee Bitcoin coming down to this level right here. And if you are a long-time Bitcoin investor, you don't want to see that happening. You want to see Bitcoin going up higher, right? So this area here right now where we are at is going to be extremely crucial, right, for Bitcoin. So that's what I see in the charts right now. Now, if you guys want me to go through any of the companies, any particular ticker symbol, drop a comment on the ticker symbol that you want me to go through so that I can cover it in the next video. So guys, that's it for market update for the week. And if you found these timely weekly update videos to be extremely helpful, help me out by clicking the like and subscribe button, because this kind of videos do take a long time for me to record and edit, and usually I don't have a weekend because I'm busy doing all these videos for you, the planning, researching, whatever not. So with that said, if you want to see how 5 of my students make $5,000 in profit in just 2 weeks on a simulated prop firm challenge, just click the video somewhere around here. I look forward to seeing you in the next video. Bye bye.